All right, welcome back everybody, or some people, welcome back. This is the part you've all been waiting for, and I can see the litigators have decided that real estate might not be top of mind, but introduced myself earlier. I'm Eldon. I'm the co-chair of real estate with Merredith MacLennan. Merredith does all the heavy lifting on this committee, but I'm happy to help out when and where I can. We have been actively engaged in real estate issues for a number of years. The history of sort of how real estate's been put back on the radar at the Law Society is in the paper that you have. I hope you'll take a minute and look through the report. The links are all there and functional, and if you're interested in any of the topics, there's some good background information and more detailed information in there. You'll see at the start, we work on a number of fronts through the Real Estate Action Committee, the Real Estate Liaison Group at the Law Society, which now has a few more benchers who actually practice real estate, which is wonderful. The Working Group on Real Estate and Lawyers is an active committee, been doing a lot of good work. So there are active things going on a number of fronts. Merredith and I have been fortunate enough to engage in some informal meetings with Jeff Lem, who's our Director of Titles, on and off at his insistence, so that's great. It's a good ability to have some influence on what actually happens in our day-to-day lives, and real estate still remains, for me and for many others, kind of the cornerstone of small-town practices. Not everybody does real estate, but an awful lot do. So in terms of the current issues, a quick update. First, the proposed reforms for commissioners and notaries. I have to admit, when I started into this, I'd never read the Commissioners Act or the Notaries Act. But MAG is looking at modifying the rules, potentially, for all of us who are commissioners or notaries, determining whether or not sworn statements can be taken by Skype or other means. I can tell you it's being actively done in the United States and probably about 20 states at the moment. So there's a good chance that someday it may be possible here. We started pushing the Law Society for some kind of guidance and answers on what we can do in Ontario back in April of 2018, I think. In any event, we did get an answer. The Law Society's current position is there in a link. To summarize what took an awfully long time to get to the end of, all lawyers and commissioners in Ontario should only commission affidavits with the person in their physical presence to swear that affidavit, so you can make sure who they are, what it is that's being sworn, etc. So they didn't go so far as to say you can't, you're not prohibited formally from doing anything else, but you should not be doing anything else. So again, if you're interested in that particular topic, there will be more news because MAG is still currently studying the question and determining whether or not there may be legislative changes. This will really fascinate those of you who are litigators. The Law Society is reviewing the definition of lending client. The definition is there. Basically, it revolves around the circumstances when people are borrowing money and determining whether or not they must have their own independent lawyer to act for them. As even the litigators, I'm sure, will know, typically there's one lawyer when you're buying a house. That lawyer represents the bank and the client. They've clearly got clients in a conflict, but it's okay for a number of reasons. One of the questions is whether or not certain entities fit within the current definition, so you don't have to have a lawyer for both sides, which just increases costs and often takes more time. The Law Society's consultation paper was first put out in April of 2019. Matthew Wiley, who's Strategic Policy Counsel at the Law Society, has recently been engaged in some back and forth with us and other stakeholders on trying to get that definition to be a better definition that everybody can work with and maybe help the public. So if you're interested again in that particular topic, I would commend to you the papers that are there, both our submissions and the Law Society's consultation paper. Before I put down the microphone to Merredith, I'm going to digress completely and just remind all of you that you're all expected to be at Chinese tonight at midnight. Apparently I've been given some kind of title. I thank my chair. Yes. Thank you for not making me wear the stupid hat that you had emailed me. But just be aware that you're certainly expected in the hospitality suite tonight. Go see our sponsors because they're a big part of the reason that we have the hospitality suite and all those other things. And I'll expect to see you all at Chinese in the middle of the night.
Thanks. So I'm going to go through a few more of the things that we've been working on with respect to real estate. We reported at the May plenary with great fanfare that long-awaited amendments to the Planning Act were coming. Doug Downey put forth a private members bill earlier in the year, and it had received second reading, and we were all very excited. There's a lot of technical amendments in there, but a lot of really good stuff for real estate lawyers. And then the Parliament recessed for the extended summer, and something I learned, when a private member has a bill that's on the table and that private member gets appointed to cabinet, that private member's bill dies. So even though we had passed second reading and it was gone to committee and all three parties supported the enactment of this private member's bill, the bill is no longer in existence because Doug is now, as you know, he's our Attorney General. And while it's fantastic for the real estate bar to have an AG who is a former real estate lawyer, and we're very excited about it, we're concerned about our Planning Act bill. So Doug Downey's office, he has confirmed that it's still a priority for him. We expect to see it come back as a government bill. I don't know where it is on the priority list. He is going to be here later today. We're going to have a chance to see him and speak with him. So all the real estate lawyers, I encourage you to bombard him with questions about the status of the Planning Act amendments. But we do expect to see them, and we are quite excited about them. And there's lots of details in the report. We have continued to work with the Law Society and with Law Pro with respect to electronic funds transfer. It is still the missing link in doing real estate transactions. We got electronic registration in the early 2000s. We can handle all the aspects of a deal, closing a real estate transaction remotely, except dealing with the money. It's still a very big problem, and we are continuing to, I don't have any solutions here for you, but we are continuing to work on it. Eldon mentioned that we are active in a number of committees. One of them is the Working Group on Lawyers and Real Estate. It's a provincial committee. I've been engaged in a couple of subcommittees with the working group, one of which is we're just about finished our work. We have reviewed and are updating standard documents for a condominium purchase transaction. There's a guide for lawyers and for condominium buyers. There's a whole bunch of checklists and standard documents and reports, dealing with status certificates, all kinds of really good stuff. The drafts are currently on the website, but we are 1 to 2 meetings away from completing those documents, and they should be published soon. And I think it will be a very good resource for real estate lawyers. Another subcommittee that I was on with approximately 22 lawyers across the province was a committee that reviewed the standard AREA, Ontario Real Estate Association clauses that the realtors all get for agreements of purchase and sale. We did a wholesome review of the 303 clauses that are there, and we've made a number of suggestions to AREA to update and modernize some of those. Ray Leclerc spearheaded that project. He had to step out, so he's not here to receive my accolades. But Ray told me that he's recently met with counsel for AREA, and they're in the process of going through it. But they're pleased with what we've put together. And more importantly than making these specific changes, I think is really opening the dialogue with AREA and partnering with them and working with them on some of these issues. I think that's valuable for our bar. Another thing that the working group, the provincial working group, which I think is on theme for this plenary, one of the other things we do is we have a mentoring initiative. And the working group, the provincial working group on lawyers and real estate is, 8 to 10 lawyers from across the province. We don't have the capability of doing one-on-one mentoring with all the other real estate lawyers across the province. So we have an online mentoring initiative. What we do is we put out questions, survey questions on specific real estate topics. We get responses in from people, and then we post the answers that, this many percentage of people who responded do something this way, and then we put commentary from the working group. And it's a way that we can help to provide some mentorship for real estate lawyers. There's a new survey question that's out. It's on the website. There's a link in our report to that. I do encourage anybody here who does real estate, if you're not familiar with the working group website, to look at it. And if you don't do real estate, please speak to the real estate lawyers in your association. Let them know what resources are available. On that note, we have been working very, very hard. In the 5 years that I've been on the FOLA executive, I think we've done a pretty decent job of getting local real estate reps from all the associations. We're still not at 100% complement. What happens is Eldon and I work very hard to prepare regular updates on real estate matters and circulate it. We rely on the local real estate reps in each association to push those out to the other real estate lawyers in your association. If we don't have a designated real estate rep for your association, then we send it to the presidents. So if you're getting it and you're not a real estate person, and you don't want to keep getting it, get us a real estate person and we will send it to them and you'll be off the hook. And we do really count on it. One of the things we've done is in the last month, we've had a telephone call that we invited all of the local real estate reps to participate in. We've been, I think, pretty diligent at getting information out to the local real estate reps to spread, and we're now trying to ensure that there's a mechanism to, we're covering the issues that people are seeing on the ground, that we're trying to open the dialogue both ways. Although I have to say, we do get numerous responses every time we send out a real estate update, so I'm really pleased to see that the information is being circulated and is getting out. And I think that's probably our time. We're around. We're here all week if anybody has any questions. Thanks.
Good morning. Bill Woodward. Now that Merredith and Eldon have you on the edge of your seats with excitement, you can hear me talk about auto insurance, and that should give you your mid-morning nap. As some of you may be aware, our current government is proposing yet again some changes to the insurance regime. Their stated goals are to put drivers first, put money back in people's pockets by lowering costs, increasing consumer choice, and making the auto insurance market more competitive. For those of you who don't practice in this area, but most of us drive cars, I think you will appreciate that insurance rates, despite the successive efforts by governments starting back in 1990 with the introduction of a no-fault type system, has not reduced our premiums. And our current system has evolved. It's been up and down. Current system, the benefits that are available to you under standard policy have been reduced. The total medical and rehabilitation benefits have been reduced. The catastrophic impairment benefits have been reduced. And the government is looking at all of these. They put forward 2 consultation papers, Putting Drivers First Blueprint, and Under Care Not Cash, and also looking at reinstating the $2 million catastrophic impairment benefit. In the government's usual fashion, in saying that they are consulting with us, we had a very tight turnaround time to prepare submissions and to answer a number of questions that the government posed to us. We formed a small committee. Mike Woodward took the lead, and thanks to Mike for doing the lion's share of the work on this. Mike practices personal injury plaintiff side, also Jay Hooper, plaintiff side, myself, defense side, and Kristen Mazinski, defense side. So we had both sides of the coin. We thought it was fairly well balanced in our approach. You probably won't be surprised that our response to the government was the initiatives that they were taking really did not meet what they stated their goals were. And it made me think of Einstein's definition of insanity. Keep doing the same thing over and over and think that you're going to get a different result. And so our response to them was generally that there were a number of specific questions that they are trying to deal with, such as dealing with cash settlements. Why are those important? And I know everybody loves dealing with their insurance company and dealing with lawyers like me, or they have an opportunity to cash out and they can take control over whatever their needs might be for medical and rehabilitation. The government was trying to impose or may impose limits on whether you can do that, and great concern to us was the notion that in order to have the ability to cash out on a claim, that you should pay an enhanced premium. So we really felt that that was inappropriate. One of the other concerns in our current system, they've moved any dispute mechanism over to the Licensing Appeal Tribunal. There are no cost consequences arising for that. So if you have a relatively minor issue that's been denied, you have to go to the LAT, presumably with your lawyer, and your lawyer doesn't get paid for that. So plaintiff counsel are picking and choosing their battles, I think, or saving up a whole bunch to deal with at the same time. So it makes it very difficult, especially if the government does follow through with the notion that they will not allow you to settle out. Again, we supported the $2 million catastrophic limit, but we have difficulty in understanding how that's going to assist in reducing premium. People that are catastrophically injured do chew through the money very quickly. Mike can attest to that. Various treatments that are required, assistive devices, modifications to homes, etc. So it's not that difficult to run through $1 million in short order. So in general, our submissions and our responses are on the website. They have suggested that they wish to fix a broken auto insurance system, and we have suggested that a piecemeal approach really isn't going to do the trick. We've been down this road before. We know what the results are, and we felt that they should really start determining what values that they want to implement in our system. Do they want to have it rich in first-party benefits, or do they want to go back to what some of us practiced before all of this came in, which was more of a pure tort with very minimal benefits available? So we are continuing our dialogue with the government on this, and hopefully we can move forward in some meaningful fashion as opposed to just simple tinkering with the existing system. So that is my report. Thank you for your attention.